Welcome to the All Together Show with Eric Satz. On this show, you'll hear Eric's unfiltered interviews with interesting and untraditional entrepreneurs who ignored boundaries, followed their instincts and own paths, and are now empowering others to do the same. Subscribe to the show and learn more by visiting alltogether.show. And now, your host, Eric Satz.
Welcome to the first ever All Together podcast. And our first guest is a co-founder of Better Tomorrow Ventures. As important, he's a husband and father. He grew up in a small town in Alabama you probably never heard of, made his way to MIT, and then Wall Street, and then the Bay Area, where he became the co-founder of NerdWallet. He's Alto IRA customer number one, and he led the first AngelList syndicate, which also invested in Alto. He may be the hardest working fund manager who communicates incredibly frequently with his portfolio and supports them in every way he can. I really hope you enjoyed the next 50 plus minutes with my friend and guest, Jake Gibson.
This episode of the All Together Show is brought to you by Alto IRA. Alto is a digital, self-directed IRA company modernizing IRA investing. They make it easy and cost-effective for individual investors to access their retirement savings and invest in alternative assets. To learn more, visit altoira.com. All
right, Jake Gibson, welcome to the show.
Yeah, thanks for having me. It's good to be here.
I want to just let all the listeners know that Jake played an enormous role in Alto's growth and development. He was not only customer number one, but I would say that he is linchpin number one to every other investor we met. And, you know, I've spoken before about how sometimes it's better to be lucky than good. I think it's better to be lucky and good. But meeting Jake was a very lucky part of the Alto story. So Jake went to MIT. He was a math and management science major, which is to say he's pretty fucking smart. Then he went to JP Morgan Chase, where he's an interest rate trader. Then he co-founded NerdWallet. We're going to get into that. Has done a bunch of angel investing on his own, and now is running Better Tomorrow Ventures with Sheel Mohnot. So all of that I think is really cool and interesting. But really, I think what our listeners would like to understand in your own words is who you are and what your sort of life development has been.
Yeah, sure. Well, I'd say first of all, you're the one building Alto. I just happened to be in the right place at the right time and connected you with people that saw the opportunity that I saw. So I can't take much credit there. And then actually, I think it was Savneet who introduced us at the first time. So if he hasn't been on your show yet, he probably should. And in terms of someone who knows alternative asset investing probably better than most. And then, I guess in terms of who I am, it's funny kind of hearing you describe my trajectory here because it's just such a stereotype. Went to not an Ivy League school, but like Ivy League equivalent school, and then went to Wall Street, and then the same time that everybody else was leaving Wall Street to go to Silicon Valley, I came to Silicon Valley, and then when running a company was too hard, I became a VC. So it was it's the path that I feel like is kind of the stereotypical Silicon Valley path these days. Next, I'm going to go raise a fund of funds. That seems to be the new thing. So everybody's going to raise fund of funds to invest in all their friends who are starting VC funds. So
exactly. So, but let's go back to the beginning. Where and when were you born?
I was born in a town called Opelika, Alabama. Back in the early 80s. I'm I guess what you would call like an elder millennial. I think I caught the tail end of the millennial generation there, where I don't feel much like a millennial, especially the way that the press tends to describe them, but apparently I am.
Do you know what the population of that town is? And I can't even remember the name, and you just said it.
Opelika. So it's right outside of Auburn, which is the more which is much better known.
Sure.
And I don't know the population. I do know that back then, most of the streets in Opelika were still red clay and not paved. Today, I think they might be paved, but I haven't been there in a long time.
Is family still there?
I have aunt and uncle and cousins that are there, yeah, and I have family that's kind of scattered all over the South. I actually, so I was born there, but I spent most of my life growing up in outside of Atlanta, which also a much better known town.
Most people have heard of Atlanta. So, what was the nuclear family? Mom, dad, brother, sister?
Yeah, so it was for most of my life it was me, my mom, and my sister. Um, or I should say, my half sister. My dad was kind of in and out of the picture for most of my life, and he and my mom got divorced when I was 2, and we were still living. I think we were still living in Alabama, or in kind of rural Georgia at that point. He kind of disappeared entirely when I was, I think, 16. It was mostly just me and my mom and my sister for most of my life. And funny enough, when we kind of move forward to the NerdWallet story, my mom ended up working for NerdWallet for something like 5 years within the accounting team. And so now she lives here in the Bay Area, which was great because she got to move out here right after my kids were born. And my sister has started making her way across the country. She now lives in Denver. So
I like Denver too. Nice place to live.
Yeah, Denver's great. The town I grew up with, actually, so me, my mom, and my sister again, the town I grew up in outside of Atlanta is actually Stone Mountain, Georgia, which has been in the news a lot lately because it's famous for literally a giant like granite mountain that is a popular tourist destination, and also just happens to have like a Mount Rushmore sized kind of carving of Confederate war generals. Carved into the front of it, and it's been there for God knows how long. But what's really remarkable about it today is that they do these laser light shows right there on the face of the mountain. It's like a big summer activity that everybody goes to on the weekends. But most of the population of Stone Mountain today is like Black and Latino, and you've got this like large group of minorities having picnics in the grass and watching a laser light show being displayed on a Confederate war memorial. So there's a lot of thinking going on right now about how the hell you fix that. You can't very well scrape it off. So
yeah, I mean that's a really good question. It's not like you can take the statue and put it away somewhere. It's carved into a mountain. Yeah, that's a tough one. So. I'm a big believer that where we grow up, who we spend our time with during the formative years, high school, plays a rather significant role in the development of who we are, who we want to become. Do you feel that way? And if so, are there certain people that were in your life at that point that helped make you who you are? Sort of non-family members?
Actually, kind of take that in a slightly different direction. I actually just spent a lot of time when I was growing up, mostly alone. Like we live in a pretty rural area. My mom would be working a lot. And so I read a lot. Read a lot, was playing around with computers a lot from a very young age. It was like the one thing my dad actually did for me that like turned out to be a positive influence. Was he got really hyped up on computers when I was really young. And so I was like building my own basic like PCs back when I was like single digits and spent most of my life like alone in my living room in front of a computer, figuring out how to like learning DOS commands, like learning Windows 3.1 when it first came out, like building the hardware from the ground up, and then like teaching myself how to code, like doing all these little, and then even just like figuring out, like this was back in the day when these computers didn't even have hard drives half the time, and like your booting your computer off of a boot disk, and then you've got these video games on these 5.25-inch floppies, and you're like, you really had to understand how the computer worked to even just play a video game. Just so different from today, where my kids have an iPad, and they've been at 1 year old, they were able to like swipe through photos and watch videos and stuff. So it's just like
amazing how intuitive it is.
Yeah. So I spent most of my childhood more or less alone, or like running around in the woods, and then and reading books and playing with computers. And so I think that kind of set me off on kind of my educational trajectory, which also largely led me to where I am today. I'd say the other really formative thing, which is, I was raised by a single mother. She never went to college. Like when I was really young, she mostly worked, she was like waiting tables and working at Domino's and stuff like that before she kind of got into bookkeeping and was able to start building a career for herself. So money was always like top of mind for me. Like one of my formative memories was like walking into my mom's bedroom when I was very young, and she's like in the dark crying because she doesn't know how she's going to pay the bills. And so I think I tie a lot of my like interest and my passion for finance and for fintech back to the fact that like I've been obsessed with money since I was a very young age. I distinctly remember, and maybe it's like third, fourth, fifth grade or something like that, a teacher going around and like asking us what we want to be when we grow up. And I didn't say policeman, fireman, astronaut, like doctor, any of that stuff. I said rich. Like I didn't really care how I got there. I just wanted to be in a position when I got older that I didn't have to worry about money. Like that was what was important to me, not how I got there. And so, I would say like in terms of kind of childhood development, kind of formative experiences, like those are probably the two big ones for me.
So when you get to MIT, who cares if it's an Ivy League school? It is one of the premier, educational institutions in the world. And, you come from a combination of a place in Alabama that no one's ever heard of, and then Atlanta. Did you go to public school in Atlanta?
Yes and no. I went to a magnet school. So it was a public school, but starting from fourth grade, I was on like an advanced track in the public school system.
Sure. So then you get to MIT, but you've grown up in a single parent household with not a lot of money, right? And you go to MIT. That's got to be a high energy and highly demanding environment. What is that like when you get there?
It was amazing. I mean, thankfully, like the school that I went to, a lot of people, we talk about, you kind of run into a buzzsaw when you start MIT as a freshman. Like a lot of people get there just totally unprepared. And freshman year is your freshman year is kind of designed to help ease you in. Like you don't get grades as a freshman, basically, because they know how different of an environment is than where most of us came from. The school that I went to, it was a public school, but the magnet program was one of the top schools in the state. And, we had a math team that beat all the private schools. We consistently had people who had 1,600 on their SATs every year. I think I took something like 5 or 6 AP classes before I graduated. Like it was a pretty intense academic program at my school. And so I actually felt much better prepared than I think a lot of my classmates did when we started MIT. I actually placed out of, I think, Calc 1, Calc 2, and Physics 1 or something by the time I got into MIT. So, I mean, it was intense. Actually, one funny story here is I went to MIT with the idea that I was going to study computer science and then get into technology. This was the year 2000, right? Like that was the thing to do. And I'd spent my life in front of a computer. Like one of the AP classes I took was AP Computer Science. And I actually taught myself C++ before I took the class and spent the whole year playing video games in that class for the whole semester because I already knew all the material. Then I get to MIT to study computer science, which naturally is like one of the hardest majors at MIT. And I dropped out. Like after my freshman year, I ended up dropping computer science and switching to math and management science, like you described earlier, largely because...
I have to ask why. Yeah. Okay.
So the computer science degree at MIT, I mean, there's a lot of degree requirements, like a lot of credits and everything you have to get. There's project classes, there's like lab class or not project lab classes and stuff like that. And I saw some of the upperclassmen um, taking lab classes where they would spend 40 or 50 hours a week in the lab, and that was just for one class, right? And I wanted to double major, and then I was also working because my mom wasn't paying for my college. I got a lot of need-based scholarships from the school, which was great and helped me a lot, but I still had to pay my living expenses and everything. So I worked 2 part-time jobs the whole time I was at MIT, and so. Like between working and between wanting to double major, like the time requirements and the complexity of doing the computer science degree just didn't make sense to me. Meanwhile, math, and when I say I wanted to double major, like the management science degree, that's actually, they call it management science, but it's basically the business school undergrad program. So like MIT Sloan, the business school, they have an undergrad program, and I studied quantitative finance within that program. And so the math degree, the reason that was a good pairing with that management science degree, there was a lot of overlap. First of all, like you had to take probability, you still had to take a couple of computer science classes. So I was able to like kind of pair up the 2 degrees in a way that meant a lot less workload for me. Plus in math, there's no lab classes, there's no papers you have to write, there's no team projects. Like I was able to do everything on my schedule. It was basically just a problem set a week, midterm, final. Every class was exactly the same. Problem set a week, midterm, final. And then I did you can focus on applied math, you can focus on theoretical math, you can focus on they actually have like a combined math and computer science degree. But then there's also just like a general math degree where you basically get to pick your own classes. And so I did that because it funny enough, like I picked it sounds like studying math at MIT would be something that's incredibly hard and complex, but I was able to like design my degree in such a way that was much easier for me. And it was mostly around time management.
Sounds hard and complex to me, and I dare say most people, but I'm glad it was easy for you. So really helpful to understand that focus and direction. So why JP Morgan Chase and why interest rate trading?
It kind of fell into it, honestly. Like naturally, I mean, I studied math and quantitative finance. Like I was probably going to end up on Wall Street. And I worked full time at a hedge, or almost full time at a hedge fund my second semester of my senior year because I was a part-time student. So in addition to double majoring and having 2 part-time jobs the whole time I was at school, I also got my degree requirements done early.
Of course.
Yeah, and it helped me save money. Like I paid half tuition or whatever the second semester of my senior year, and then I was able to work at this hedge fund most days. And it was a tiny hedge fund, like nobody's ever heard of it. They had this like weird, complex investing strategy, but like naturally, I was going to end up on Wall Street. And funny enough, like my junior year, so that's the year that you do like the internship, right? Like the summer after your junior year. And me and all my friends, like we applied for kind of everything in consulting and banking. I think I interviewed with like every bulge bracket firm on the consulting side and the banking side out there. I only got one offer, and apparently I interview very poorly. I only got one offer, and it was from JP Morgan. And funny enough, like it was like a 15-minute interview, and then they passed me off to the HR team. And I didn't even think the interview went that well, but I got a call later, and they wanted to offer me the internship. But they actually offered me an internship in equity derivatives. And then I get a call from the recruiter a couple months before the end of the school year. And she says, "Hey, we actually we have some openings on the fixed income side. Would you be willing to do that?" And I'm like, this is the only offer. This is the only option I have right now. So put me wherever you're gonna, wherever I'll fit.
Right.
Like I've got bills to pay. Like I just want to get this internship. And so they switched me over to fixed income, and then like randomly, literally 2 or 3 weeks before the end of the year, I got a call from the guy from one of the guys that was running the prop trading desk on the fixed income derivative side of JP Morgan, which I came to find out it was basically like a multi-billion-dollar hedge fund operating within JP Morgan, focused exclusively on fixed income and interest rate derivatives. Like they had a macro strategy, a relative value, all this cool stuff going on, for anybody out there who's read the book LTCM or When Genius Failed, about LTCM and how they collapsed in the late 90s, the group that I got recruited into at JP Morgan was basically that exact same operation, running the exact same strategies.
And LTCM, for people at home, long-term capital management?
Yeah. So it was like a very famous quant hedge fund focused on arbitraging differences in interest rates between various products across various geographies and so on and so forth. And, it's like a bunch of PhDs, like very famous story. Like this is kind of where the idea that like markets can stay irrational longer than you can stay liquid, or whatever the exact wording is. It kind of comes from that, where like they were levered up, I think like 50 to 1 or something like that, with like massive multi-billion-dollar trades on very tiny differences in interest rates. And then like Russia defaulted on their bonds. There's like an Asian debt crisis, and then and they just kept piling on the trades because the trades kept looking better and better. But then eventually the Fed actually had to bail them out in this like massive, similar to how like the Fed had to bail out the entire financial system in 2008. Like they bailed out a hedge fund, which like was unheard of at the time, because they were such a systemic risk. Anyway, the group that I went to go work for, it turns out, was essentially that all over again, but much smaller. And so they recruited me for my internship after my junior year, and I spent that entire summer like showing up at the desk at 6 o'clock in the morning and going home at 8 at night. Trying to prove myself, and they offered me a full-time job, and I didn't even interview anywhere else my senior year. I just coasted and then went to go work for them after I graduated.
You just said, "Where do I sign?"
Basically, because it was a great desk, incredible opportunity, and I had bird in hand. So
when you think back, how much did what do you want to be when you grow up? I want to be rich. How much did that play into your decision to, ignore for a second whether you interview well or not, because I think this interview is going pretty well. But ignoring that question for a second, were you driven to Wall Street because you were a math and management science major, or because you knew you could get quote unquote rich there, whatever that means?
It was a little bit of both, I would say. So there was definitely an intellectual curiosity I had with finance and kind of the quantitativeness behind it. And, there's, I can't remember the name of the book now, but there was this book that gets into like the nitty gritty of how, like, I still think that interest rate derivatives and alternative asset classes and like things like that are just incredibly interesting. And there's kind of this mix of like the math and the quantitative, like almost like the physics of it, but then there's so much emotion and irrationality and psychology and everything that goes into how the markets actually operate. Like it's this weird thing where like we as humans have taken something just so incredibly complex and feel like we could just distill it all down into linear formulas, and it kind of does and kind of doesn't work. And I found that really fascinating. But at the same time, like, sure, I spent my junior and my senior year like planning out like exactly how much money I was going to make over what years of my life, how long it was going to take me to pay off my student loans, like when I was going to buy my first Maserati, like like fantasizing about life in New York and all this other stuff. So yeah, I mean, that played quite a bit into it. We'll fast forward at some point in this conversation to me leaving Wall Street and how that mindset changed.
So, and it's a great segue, but I'm going to provide an additional bridge, because I asked you a question before you came on the show about whether or not you ever had a financial crisis, and you pointed out, and you told me about your childhood, and financial crisis is relative, which of course it is, growing up with no money. But then you also said you almost lost your job in 2008. And so you end up staying at JP Morgan Chase for, another year and a half, whatever it is. You don't leave until like March 2010. What happened there? What happened there, and what led to the co-founding of NerdWallet?
Yeah, so almost exactly 10 years after LTCM blew up, the financial crisis happens. And I was on a desk that made money by taking big risk with the bank's balance sheet. And everybody who knows their history knows that bank balance sheets were under were under a lot of stress and under a huge microscope in 2008. And so, I was there at JP Morgan, like when we took down Bear, when Lehman blew up, when we took down WAMU, like all that stuff's going on. And they basically shut our desk down. And wouldn't let us take any risk anymore. And actually, that ended up being kind of regulated away, where prop trading was no longer even allowed. But like in 2008, JP Morgan was just like, you guys need to close your books and sit on your hands for a while, which is actually kind of nice, because like I spent the summer of 2008 essentially working 9 to 5. Like I'd come into the office, watch the markets, but we weren't allowed to do anything. When all this stuff was going on with the TARP and everything like that, and like crazy equity moves, and I wasn't allowed to trade. So I got a front row seat to all that stuff and wasn't in position where I was of watching my livelihood vanish, except in my personal net worth, which I kind of found out later in the year. So like, young and stupid in my 20s, reading all these personal finance magazines, I had something like 80% of my liquid net worth in the stock market, in like S&P ETFs or whatever, without understanding like correlations and risk, and the fact that I was working somewhere where my job was very highly correlated with the stock market. Like just having a job was correlated with the stock market. I was getting a lot of my compensation in unvested equity in JP Morgan, which was very highly correlated to the stock market, especially in 2008. And then I'd also bought my mom a house in 2007, like in the worst possible time. Like she wanted to leave Atlanta. She wanted to move down to Florida to be closer to my great-grandmother and my great-grandfather. So I bought her a house in like a little town called Largo, Florida. And then just like totally lost my shirt on that too. I think I lost like 40% of the value on that house. And so I sit there and I watch like my net worth vanish. Like I'm worried about my job going away because they shut our desk down. Like by the end of 2008, they actually kind of brought us into a conference room and told us, you've got 6 weeks to find another job within the company, or this is the severance package we're going to be offering you. So I was like looking at losing my job. I was looking at the fact that my liquid net worth was down 50%. Like my unvested stock that I'd been paid over the previous couple of years was basically worth nothing at that point. And I was engaged to get married a few months later. And I'm like, here I am, like about to try to start a new life and everything, and like eventually start a family. And like, I don't have any money anymore. Like here, I thought it was like Wall Street hotshot. Now I'm freaking out. So that was kind of the personal financial crisis that happened in line with that financial crisis. But it also like, I took a lot of learnings away from that. I can't say that was the moment I decided to leave Wall Street, because I'd taken the GRE and the GMAT a couple of years before. Like, basically, I'd been trying to find a path out of Wall Street, but that was the final nail in the coffin when the crisis happened. Oh, and I should also say that like we did not get bonuses at the end of 2008, so I effectively like didn't get a paycheck in 2008 either, on top of all the other stuff. So there was no recouping all that value that I had lost.
So, I mean, your story resonates with me on many fronts, but we're not going to talk about that right now. Instead, what I'll say is, and you know this, what's interesting to us at Alto is that we talk about and we preach about portfolio diversification, and the point of adding alternatives to one's portfolio is to have those assets that can act in an uncorrelated fashion to the public markets. And so many young listeners out there have never seen the stock market actually go down until about 3 months ago, right? And it was like big wake up call, sort of kind of to you in 2008 and to me in 2001. I mean, I still remember receiving a 401k monthly balance statement from Fidelity, thinking they had made a mistake. I'm like, that number looks nothing like the number that was on that piece of paper the month before.
Yep.
Right. And the fact of the matter is that portfolios, stock portfolios, the public markets go both ways.
Yeah. It really teaches you a lot about just what risk means and what correlations mean. Like, these are abstract concepts that have like very real consequences. And until you've actually seen stuff like that happen, you don't know what risk means. Because, like, you know, when you just kind of read about investing all the time, you think you put X dollars in your account today and you'll take Y more dollars out of your account in some future date. But that's just not how the world works.
If only it did. So you know that you're going to leave Wall Street. Where does the NerdWallet idea come from? You co-found it with Tim Chen. Where does it come from? Why is that the idea to leave for? How does it happen?
So Tim got laid off. Tim also worked on Wall Street at the same time I did. He worked at a series of hedge funds. He actually lived across the street from me for a while there. We've known each other since 8th grade, so we go way back. He's also from Atlanta. He got laid off from his hedge fund the same time that I was effectively, the same time that I was almost laid off from my job. But so what ended up happening with me was one of the other desks on the interest rate trading side at JP Morgan reached out to me and asked me to come work for them. And so I ended up staying at JP and didn't actually end up leaving. Tim did the wiser thing and decided to just take 2009 off and kind of went traveling around. Knew that he wasn't going to find another hedge fund job in 2009. So just kind of went and enjoyed himself. In that time, like, he kind of already had this idea for what would eventually become NerdWallet. It was largely Tim's idea. He, in his previous hedge fund role, had evaluated the creditcards.com S1 when they were thinking of going public, and so we learned a lot about kind of lead gen for financial products and SEO and all this other stuff. And around the same time, like, his sister had started a coupon company, and actually in Australia, of all places, around the same time, like Sheel Mohnot and companies like that were coming up. And so she built that company on SEO, and so that also kind of gave him some ideas there. So these are all things you're just kind of like planning in the back of his head. And then 2009 rolls around, and he's just taking a bunch of time off. And at one point, so his sister sells her company and comes to him and is like, "Hey, I need to like get my finances in order. Like, can you help me with this stuff? You're the hedge fund guy. Like, you should know, like, what credit card should I get? What bank account should I get? Like, where should I put my money brokerage wise, and like all this sort of stuff." And he realized, like, when you sit down, like, the reason she's smart. Like, why is she asking me these questions? Why isn't she able just to do it herself? And so he goes online and he starts like doing the research and realized that, like, the marketing for financial products was just so broken. And like, especially, so he started with this idea of credit cards. Like, he'd kind of gotten this idea from creditcards.com, and when you go and you search for credit cards, you land on a site like creditcards.com. Like, their best rewards credit card and their low interest rate credit card are the exact same card, and the low interest rate card's charging a 29% APR, and you're just like, something's not right here. Like, this is clearly not targeted towards the user in any meaningful way. And like, we're in the generation of Kayak at this point. Like, we all have iPhones. Like, everything is like transparent and customizable, and everything else that we've kind of done in our lives, we're able to get this really unique, like, kind of new internet. Back then we were calling it Web 2.0 experience. Mm-hmm. But when you go look for financial products, it's literally, you're just like looking at NASCAR. It's just like a billboard. Like, every pixel is paid for. And you're kind of just like, you're preying on the end user by creating complexity and then just telling them like, oh, 5% cash back. I'm like, oh, that sounds cool. I'll just get that. And back then, I think something only like small single-digit percentage of credit cards were actually being distributed through online channels. Like, most of it was still going through bank tellers. Like you'd walk into your bank branch to deposit your paycheck, and they'd be like, "Oh, hey, you have $5,000 in your checking account. Have you looked at our credit card?" And they'd sell the stuff that way, or you'd see Alex Baldwin on TV, and then you'd go Alec Baldwin, and you'd go sign up for whatever credit card he was shilling. And so he saw an opportunity here to basically kind of take that idea of like, we're in this new world of kayak and financial products marketing is so broken. Like, why don't we merge these and kind of do a kayak for credit cards was his initial idea. So he went out and bought himself one of those cheap EPCs, like a couple $100, like little like tiny laptop. Started teaching himself web programming while he was like backpacking around Greece and stuff like that. And every now and then he'd come back to New York every now and then, and we'd sit down and chat about what he was working on. And like I'd spent basically ever since the iPhone came out, I was sitting on the trading floor every day with my phone, like reading TechCrunch, like going through my RSS, like my Google RSS reader feed.
RSS.
Yeah. And like reading all of the Silicon Valley publications. And I have a bunch of friends from MIT who did the right thing and went to Silicon Valley when they graduated, especially the people that were a little bit younger than me and didn't get caught up in the banking and consulting wave. And had gone on to like start amazing companies, and it seemed like they were having a blast. And I'm sitting there reading about them every day and TechCrunch and stuff like that. And so what Tim was working on was just like so exciting to me. It was like, even though, I mean, it's credit card marketing at the end of the day, like just the fact that he was building something and like he was ostensibly getting into that kind of tech ecosystem, like I loved that. And so we would riff with each other whenever he was in town. And then at the end of 2009, or I guess January of 2010, told my boss at JP Morgan I was leaving. They made me stay until March, but I ended up phasing out at that point, and then joining on with Tim to start helping him build NerdWallet. And originally the idea was just like, so in 2009, my wife at the time and I decided that we were gonna just make the move to California regardless. Like I was gonna quit JP Morgan. We were gonna move to California, and then I was gonna figure something out in the tech world. But throughout that year, I just got pulled more and more into Tim's orbit and ended up joining on with him and helping him do NerdWallet. And so then, it was the summer of 2010 was when I actually moved to California. But at that point, I was like all in on NerdWallet with Tim.
So what was that like, the conversation with your wife? Because that's a joint decision. That's not a Jake decision. It's like, hey, I'm going to leave JP Morgan Chase, which, pretty steady paycheck. We're back at 2010. Things are going in the right direction. I'm going to leave JP Morgan Chase, and I'm going to go do this startup NerdWallet. Put San Francisco and the Bay Area aside for a second, because my wife and I made a very similar move, by the way, from New York to San Francisco. But putting the Bay Area aside, what's that family conversation like? Because it is a family conversation.
Yeah, that conversation was really years of her going, I didn't want to live in New York anyway. Like, when are we going to move to California?
Well, that makes it easy.
Yeah, so she actually grew up here, and
okay,
it was always on her roadmap that someday I would leave Wall Street and we would make the move. I kind of always thought that, like, I don't have a skill set that anybody in Silicon Valley is going to give a shit about. So, like, I'm going to have to figure out a way to like find a trading job or some kind of finance job in California. Who the hell knows? Like, I mean, there's PIMCO out here in Newport Beach, but like, I don't really want to go to work at 3:00 in the morning to trade bonds.
It's a tough life.
Yeah, even if I am living in Newport Beach. And so I think they're in Newport. And so I never could quite figure that out. And eventually, I mean, the financial crisis was kind of what initially told me, like, fuck it, just start something. Like, worst case, what I kind of came around to was, I could go to business school, I could go to grad school, or I could save that money and just try to build something for a few years. And ultimately kind of force myself to learn, force myself to meet people, kind of get to reteach myself how to program, like all this other stuff. And once that inevitably failed, as I assumed it would, like I would at least have built a skill set that I could then go shop out to tech companies and potentially get a job. Like maybe I could go knock on my buddies' doors at their companies and say, hey, like I kind of know how to do things now. So like, can you find a spot for me? That was kind of my idea. Like when I moved out here, which was, why stick with finance? I don't want to do finance. So like just start building something and start learning and kind of find your own, like do your own business school and find your way into the tech world through the back door if you have to.
So, being an entrepreneur, starting something is hard, right? It's not for everyone. What were the hardest parts in that startup story for you guys with NerdWallet? And was there ever a moment where you thought the whole thing was just going to implode?
Oh, for sure.
And conversely, was there a moment where you knew this was going to work?
Yeah. So I would say like Tim and I both benefited a little bit from just like irrational confidence in our own abilities, which I think is kind of one of the defining.
Amen.
Yeah, exactly. Which I think is like probably one of the defining characteristics of people that make that leap into entrepreneurship. Is just like, I don't know what I'm doing. I don't need to know what I'm doing. Like just, the classic analogy is like just assemble the airplane on the way down, figure it out as you go. And as long as you can perform under pressure, because you're going to always be under pressure, like, eventually you'll kind of figure it out. And if you don't, you don't. Like, I just kind of felt like I had a couple of years of runway, and if I burned it all out and everything failed, like I could still probably get a job somewhere. Like I didn't feel like I was going to end up hungry. And so that was the bet I was making. And I would say, yes, it was stressful for a while there. Like, we had this thesis that if you just create good content and like build a good product, like it'll start working out. Like Google will find you, the press will find you, your users will find you, and it'll start working out. Like we intentionally tried to avoid, or not tried to, we intentionally avoided the traditional SEO world of like trying to reverse engineer the Google algorithm and like hyper optimize it. We just felt like that was a losing game. Like there's thousands of PhDs over there trying to outsmart you. So like, why play that game? Meanwhile, Matt Cutts was going, the like head of search spam at Google, was going on YouTube every day and answering every single question he got with the same answer, which was just make quality content and we will find you. And so we're like, all right, well, let's try that. The thing is, when there's all these other people out here that are playing the short game, and it's really hard to keep playing the long game when nothing's happening, right? Like we showed up for work every day and did the same stuff, and we had all these great ideas, and we're like, there's all this motion, and we're like doing all these, and we feel like, oh, that's brilliant, let's do that. But then there's nothing to show for it. And that was basically the case for the first 2 years. It was just the two of us. Like originally it was just me out here working from home and Tim working from home, or working from a tiny little office in New York. Eventually Tim made his way out here. We opened up a closet basically in Redwood City. But it's still mostly the two of us. We ended up hiring one person full-time between like 2010 and 2012, and had some contractors kind of rotating through, but like that was it. And still just like nothing to show for it day in and day out. And it was tough for a while there. And actually like, I talk about there being that 2-year window. I wanted to do like the business school thing. And then if it didn't work, like we had to go figure something else out. And we were coming up on that 2-year mark, and Tim starts getting like random like inbound, like not job offers, but like solicitations from hedge funds and stuff like that, where he could have gone off and just made a lot more money than he was making at NerdWallet. So we had some real hard thinking to do, but then we got incredibly lucky. Like, thankfully, we had done the work and we had everything kind of in place, but then one day Google just massively changed their search algorithm, like just overnight. Like they just kind of ripped the whole thing out and replaced it. And this was kind of the famous for people that care about SEO. Like they did, I don't remember the sequencing, but there was one called Penguin, one called Panda, and there was like a Penguin 1.0, 2.0, Panda 1.0, Panda 2.0. These just like really big algorithm changes to fight the kinds of search spam that we were competing against. Whereas largely, like a lot of those ads back in the day of like work from home, make $5,000 a week. Like it's basically just people sitting at home. You pay people in the Philippines to copy other people's content for you and put it on your website, and you pay people in like India to go buy in links for you, and then you inevitably you end up shilling financial products that way. So like that's what we were competing against because it was so lucrative. And again, like we're trying to play the long game, but then Google comes in and just like what's the word I'm looking for? They just like kind of napalmed the market. So we woke up one morning and like traffic is exploding. We're like, what the hell is going on? We eventually figured out like there's this algorithm update, and like basically a lot of our competition just got wiped off the map. And then we were off to the races. So that was when we knew that like this could work. We didn't know at that point. We still at that point were thinking of it as like a lifestyle business though. Like it was still just me and Tim. I think we were still an LLC at that point. Like we weren't even a C corp or anything. And it was just me and Tim and one full-time hire who we'd recruited out of Brown. Like she hadn't even graduated from Brown yet. She was a summer intern that stayed. And so that's one thing we kind of figured out that things are starting to work. And the more we thought about it, the more we realized there's a huge opportunity here. Like now that we have a playbook for distribution, we have a way to kind of fix, is the way that we were thinking about, like fix credit card marketing. Like how do we put the power back in the hands of the consumer? We started to translate that to the rest of the financial world. So like, why can't we do this with every other product? Why can't we do it with loans, mortgages, insurance, whatever? And so then our ambitions kind of started to creep up, and early 2012 was when like NerdWallet, as we know it today, really came to be, because that's when we moved to San Francisco and we started hiring people, and like really started investing in our growth and expansion across financial products. And like that was kind of the beginning of us creating this like consumer brand of transparency and like being the trusted advisor for finding financial products. And then, yeah, I mean, it was more or less off to the races. I will say like the hardest thing after that for us, and I think the biggest existential risk for us, was just we had never managed anybody before. Like we'd both spent the previous 6 years or so on Wall Street, where like not only have we never managed anybody, but we'd never been managed. There's not really managers on Wall Street. And so the idea of trying to build and scale an organization, like a relatively complex organization as well, like it wasn't just like a small tight-knit group of engineers building a technical product and going off to the races. Like we had this like content operation, this big marketing operation. We also did have the engineering, product design teams, all that other stuff, but we were like kind of a different beast than your typical like early stage Silicon Valley company. And we didn't know what the hell we were doing. We just like hired a bunch of our friends, put them to work. A lot of them worked. Some of them didn't. But we also didn't really know.
Hire your mom.
Yeah. Yeah. Eventually. She was our bookkeeper from the early days. And then eventually we brought her on full time. And so there was a lot of complexity around like figuring out how to manage people, hold them accountable, communicate the right things. It was a massive learning curve along those lines. And I will say that I probably did not advance up that learning curve nearly as quickly as Tim, which is a big part of the reason why I left in 2014.
So that's interesting, because you went into angel investing and you sort of proved your capabilities sort of as a solo investor, what some are referring to now sort of as a solo capitalist, and what, used to be you just had an angel and now you have these solo capitalists. But you proved your ability to network and invest in a large number of fintech companies, and which ultimately led you to form Better Tomorrow Ventures with Sheel. And so here's my question for you, because people need to do homework. They need to do their due diligence when they're deciding to invest in an early stage, seed stage type company. You always need to do your homework when you're investing, but early stage investing, I think most would agree, can be a little trickier than most. You know how hard it is to build a company. What makes you want to, invest your money in other entrepreneurs?
There's a lot of reasons for that. One of them is purely economic. I just think that most of the value going forward is A, going to be created in the tech industry, and B, going to be created in private markets. And I was looking at my own personal asset allocation and saying, I don't really want to invest in public equities. I don't really understand what's going on there. Valuations don't make any sense to me. And granted, this was 5 years ago. So I've been wrong for 5 years. But it just seemed to me like investing in early stage companies at lowish valuations and essentially trading on inside information, because you get to meet the founders, you get to spend time with the founders, you get to learn how they operate, you get to help them operate. You get a lot more influence. And I feel like you have a lot more, you get paid for different types of edge when you're doing early stage investing. So you get paid for liquidity, you get paid for access, you get paid for your ability to kind of move the needle for those companies and things like that, where in the public market, there's nothing you can do to influence the outcome, right? And there's, you're just going to earn the market beta. There's no, I as just some schmuck sitting at home, I'm never going to generate any alpha investing in public equities. And so I felt like getting into the private markets was much more interesting to me. And then I also, just by nature of the fact that I'm sitting here in Silicon Valley and I'm just excited about technology and everything going on here, angel investing gives me a front row seat to what the world's going to look like in 5 or 10 years. And so I've realized over time that I need to focus my attention exclusively on fintech. And I'm really excited about all the things happening in fintech. But as an angel investor with no LPs and no mandate, I invested in space companies. I invested in robotics companies. I invested in most of my portfolios in fintech, but I'd occasionally dabble in things that I don't really understand, but I think are cool because sci-fi. So that I found really interesting. And then it's just the kinds of people that want to go start companies and subject themselves to this also just tend to be really interesting people to hang out with. So so this was a way for me to just surround myself with people smarter than me, people willing to work harder than me, and learn from them.
Well, as a sample size of one, which is of limited use, but as a sample size of one, for folks who are looking at Better Tomorrow Ventures, who are thinking about Jake, who are thinking about Sheel as potential investors, I can tell you that they work as hard as anybody else in Silicon Valley, and they do a shit ton of work to try and make your life as an entrepreneur easier by connecting you with the other people and the other companies they know and think may be of use or helpful to you. So I'm going to put that plug in there.
Thank you.
Sample size of one, but it comes from real experience. For those who have been Googling NerdWallet, the sort of tagline now is "Make all the right money moves," and it really is about personal financial decisions. And I think the tie, and one of the reasons I wanted to have Jake on the show is because we're all thinking about what we need to do to be in a position to choose whatever our retirement looks like, right? And so, it used to be that our grandparents or great grandparents, retirement was you stopped working and I don't know what you did. I mean, it sounds boring.
Yeah, golf.
I think you and I are both on the same page in the sense that, retirement is really being in a position to, or to put yourself in a position to do what it is you want to be doing with your time at a certain age. And that could be working. That could be investing in more companies. So, Jake, I want to thank you for being on the show.
Yeah, thank you.
I really appreciate the time you spent here. I appreciate everything that you have done for and with Alto. And I look forward to continuing our relationship.
Yeah, likewise. Thank you.
The Altogether Show is brought to you by Alto IRA. Alto knows that the public markets offer insufficient diversification of retirement accounts. That's why Alto developed a streamlined platform to make it easy and cost-effective for anyone to invest their tax-advantaged retirement savings in alternatives. Assets like real estate, venture capital, and crypto that are outside of the public markets and available through Alto's 21 platform partners. To learn more, visit altoira.com.